Good afternoon, guys. It's Working, bringing you a quick update on Bitcoin. Hope you guys are having a wonderful afternoon. We're looking at Bitcoin to the US dollar. This is the 1 week chart on Bitstamp, guys. And I apologize, there were no updates over the weekend, guys. It's been, hey, what can I say? I was enjoying the weekend with my family, guys, but it's good to be back with you guys. Good to be looking at the charts. Certainly looking interesting. No question about it, guys. Bitcoin is reaching a fork in the road to where I think we're going to have a larger breakdown or we're just going to crash through. I think the former is more likely. I think, as I said on my last update, guys, we could have one more kick up to approximately the $6,000 range, maybe even wicking through it, and then I'm expecting a larger 25, at least 25-30% breakdown. Now, looking at this chart, guys, as I told you on my last update, I mean, it's very, very easy to see when you pull out here on the weekly chart like we're doing now, the major areas of resistance, guys, of course, between $6,000 and really $6,700, but I'd call it really between $6,000 and $6,500, $6,450-ish. That's where the major resistance is above current levels. But if we zoom in here, guys, there's no question that the top of this zone here, right about 5,800 that I had drawn out before, is very, very relevant, and we're currently hitting the top of that zone and kind of peaking out at the top of that zone now. If we look back here in the past, pardon me. If we look back here in the past, guys, the top of this zone at approximately 5,800, that was the area when we finally broke up above resistance on back in October of 2017. What was resistance started acting as support. That was very key, and of course we bounced off there, and we all know that took us up to our $20,000 high. Now we bounced right off the top of that zone, really the top of, everybody says 6,000, but really the top, when you're looking at the wicks, the top of that zone, and when you're looking at the body back here, guys, the top of that zone was really 5,800. So we've got two major areas of resistance really right on top of each other or right below each other, depending on how you're looking at it. So the first area, the top of that zone here is that 5,800. So if we can break above and start trading above 5,800, now again, I'm looking at Bitstamp. I'm not even concerned with Bitfinex right now. Bitfinex is trading at about a $350 premium. Yeah, it's currently, what is it, sitting at about 6044. So yeah, about a $370 premium, whatever it happens to be. So I'm kind of ignoring Bitfinex at the moment, guys. I think that could move the market. That's certainly creating a lot of uncertainty in the market, and it really depends on which way that goes. Just again, a lot of uncertainty. That there certainly has the potential to tank the market, and it also has the potential to carry this thing up above into this zone between 6,000 and 6,500. We'll have to wait and see. But until then, guys, really there's nothing I can do about that kind of news. So all I have to do is look at the charts, and even the charts are telling me, guys, that the top of this zone at 5,800 is a very, very crucial zone. We could get a strong rejection if we break above and start consolidating above. That would be a very, very bullish sign, and I'll start to think that maybe breaking 6,000 is on the table. But if we break above here just by a wick and get a very, very strong rejection, guys, again, watch out below. I think it'll be a quick drop to about 5,000 at least. We can see that's the bottom of this order structure back here. And remember, we're looking at the weekly here, guys. So that is let's see, 1, 2, 3, 4, 5. That's 5 weeks of consolidation right on the top of that $5,000 range, really between 5,000 and 4,900. So that's no small support down there. So could we get a bounce off that zone? Yes. If we did, and we got a strong bounce off that zone to be extremely bullish, I think we're likely going to get a bounce, whether it's a small one or not. We'll have to wait and see. But yeah, I'm watching. Of course, I'll be watching that zone. I probably won't play it though. I will be expecting, if we get a strong breakdown here, guys, I'll be expecting a drop down to at least 4,500, if not looking at that 4,120 to $4,000 range, which of course was our major area of resistance that should act as major support. Now, looking at our weekly indicators, guys, I've pointed this out, but it's been a little while. If we go point to point here, clearly price created a lower high. If we come back down here to the exact same point on our MACD, and I'm just going to bring it up here because it's a little bit easier to see if I pull it out here. If we go to the exact same point on the MACD, I'll draw it out there so you guys can see that I'm actually looking at the same point here. Obviously, the MACD created a higher high. So this being an overall, there's no question, if we look at this overall structure, this is still an overall downtrend, guys. We have yet to break its plane here. We have yet to create a higher high when looking at this overall structure here. Or when looking in context from our breakdown here from our $20,000, guys. So clearly, we're looking at divergence. In this case, this being a downtrend. Looking at the top here, that's hidden divergence. In this case, hidden bullish divergence. As I told you in the past, this weekly indicator, weekly MACD, is calling for a larger correction to the downside. Looking at our Stokes, pardon me, guys, frog in my throat there. Sorry, guys. That's rude. All right, looking at our Stokes, guys, we can see that that's, and again, I don't look at this indicator very much, but I'm pointing it out now because, as I've said in the past, it's very, very rare you see the Stokes get this overbought and stay up here for so long without a major correction. The last time, again, we had it was December of 2017, where we did have that larger correction, and really every time we've seen it so oversold like this, we've had a larger correction. So that doesn't mean that we are going to get one, but it just, again, means probability-wise we are definitely due for one. All right, and looking at the weekly RSI, I've pointed this out in the past as well, guys. We can see this about 53.9 on the weekly RSI. This is a relevant zone in my opinion. In the past here, it was acting as resistance, broke above resistance, and then it acted as support, basically from October 2015 all the way until our breakdown here on January of 2018. And then what was support started acting as resistance, as you can see, and then of course it just broke down. And we just recently broke back above it here on March 25th of 2019, and we have yet to break down below it. So I'm pointing this out because if we come down here and correct down up to and including this zone, guys, I think that'd be a healthy correction. If we start breaking this zone, guys, then you want to start watching out below. And that was not just true on the weekly. Ironically, guys, call it whatever you want to, call it a coincidence, call it whatnot, but that is also true on the daily RSI. Daily RSI, 53.9, guys. We can see in the past here, all the way back in September 2018, it was acting at, once it broke below, it was acting as resistance. Very quick breaks above, but very quickly rejected again by the bears. Again, all the way through until we finally got above it here, a decisive break above on February 2019, and then it started acting as support. Again, brief breaks below, but for the most part, acting as support. Bounced off it again here, and I had pointed this out in the past, guys, and of course it did bounce, double tap here, came right back up here. So if we come back down and we again a break below this 53.9, guys, I think that's going to be a very bearish sign. And again, watch out below. But up to and including 53.9, guys, I'd be looking for a decent bounce. We'll have to wait and see if that does happen. But it's certainly a relevant zone to keep an eye on if we do break that plane. All right, so pulling into the daily, we are still in an ascending broadening wedge, in my opinion. I'm noticing that all of a sudden everybody's starting to call this an ascending broadening wedge. All of a sudden, I mean, guys, never mind. I'm not even going to go there. I'm just. Please, guys, there are some people on here, and again, it's not. There are some people that just like to copy other people, guys, and I know some of the people that are doing that. And I mean, just do your own thing, man. At least if you're going to copy somebody's content, at least try to change some of the words around a little bit. Don't, verbatim. Anyway, all right. Sorry, guys, that's a rabbit trail. But bottom line is, yes, I think we're in an ascending broadening wedge here. A few people have questioned that. I disagree. I think this is an ascending broadening wedge. I think it meets every characteristic of that. That being said, it's not that big of a deal, other than we have an ascending support or an ascending resistance line here that's going to be relevant. We have an ascending support line here that is also relevant. And a broadening wedge, guys, as I told you on my last update, that probability-wise, it's favoring down, but it's not a huge probability. It's depending on where you look, guys. It's anywhere between 52 and 55% chances of breaking to the downside. So, that's anywhere between what? That's anywhere between 45 to 58% of breaking up. So, again, not terrible odds if you are a bull. That being said, guys, we're going to be watching this closely. We can see that clearly this thing could break up even higher and still maintain itself within this broadening wedge. If we come over here and we look at longs and shorts, I mean, shorts are just, this is, again, I haven't seen anything like this with the exception of, the last time we saw this was in December of December or January of 2017, where shorts were just stacking and there was nothing that was stopping them. I mean, it was just, they were adamant. Price goes up, they still go up here. So whether this is insider trading, I think a lot of it is. Who knows whether this is people projecting the outcome of this tethered Bitfinex thing. Maybe they know something I don't. Who knows? But there's no question that shorts are being extremely stubborn, very unusually so. Typically, this would suggest a breakup in price to liquidate these short positions, guys, but this should have happened. That breakup to liquidate short should have happened a long time ago when price broke up here to hit that 5,800, guys. That should have liquidated a lot of shorts, and it didn't. Shorts fell by like 4 or 5%, which is just almost nothing, and they're just continuing up here. So this is very strange. This is very unusual. Typically, this would cause a short squeeze, price to break up here. but we are so close to resistance here, guys, so close to that $5,800 to $6,000 resistance, guys, that there's a lot of people that are going to go in short up here. So a break up here, guys, it's a very touchy thing. It's going to be very interesting to see how this ends up playing out. That being said, I can see a wick to the upside here, possibly even breaking 6,000, because a lot of people are just going to play the shorts right at 6,000 and just ignore the fact that we do have a lot of resistance even above 6,000 here. So I think the smarter play, everyone's going to go in short at 6,000. So I think if you are going to go in short, I think a smarter play would be to do it up here at about 62, 6,300. If you're going to go short, seeing a wick all the way up there and then breaking down, I think that's the more logical play if you're looking to go into a short position. That being said, could it happen now? Absolutely. We are at a very strong resistance, as I pointed out in the past, guys, all the way up to and including this 5,800, the bottom of this zone here. Was a very strong resistance, as I pointed out in the past, guys. So we'll have to wait and see how this plays out. I don't mean for that to sound like a cop-out, guys. It is what it is. Right now we're sitting at the top of a major resistance, guys. It doesn't make sense to go long right here if you're a trader. If you're dollar cost averaging in, yeah, you're dollar cost averaging in, do your thing, guys. I think Bitcoin overall, whether or not Bitcoin drops down here to 4,000, if you're a long-term holder, is buying Bitcoin at 4,000 versus buying Bitcoin at 5,500, is it going to make that much difference in 3 years? Probably not. It will, of course, it will some, but overall, probably not. And if you're dollar cost averaging in, that's why you do it. The dollar cost average in, if it does drop, you'll have money to invest when it does drop, and if it does rise, again, you will have bought some down here. So either way, that's the purpose. That's a strategy of dollar cost averaging in. But for you day and or swing traders, I don't see going in long on Bitcoin right now. I don't see scalping Bitcoin right now for a long position. I think it's very risky. Now, if you're thinking we're going to get that bounce and that wick up above to try to liquidate short positions, yeah, I can see that. I think it's a very risky play. If you wanted to do a small play like that, sure, I can see the logic there. I just think, again, I think it's very, very risky. I think the smarter play is to wait and see how this plays out, and certainly wait and see how the Bitfinex Tether thing's out. That's your wild card. That's the thing. All this TA could play out in one way, guys, but that could be all the best TA in the world. Isn't if this Bitfinex Tether thing goes south, or if it doesn't, or if this thing is completely cleared, that could just cause a lot of movement to the up or downside. And TA isn't really going to foresee that, I don't think, at the moment, unless you're going to say this is all insider trading, which it certainly could be. And I think insider trading would suggest a break to the upside and a strong break right back down, if that is in fact what's going on. All right, looking at moving averages, exponential moving averages, guys, we can still see we're well above the 21-day EMA. That is bullish. As you guys always know, I'm a very, very, very big fan of this 21-day EMA, guys. I think it can definitely a break above or below from extended periods of being above or below. It can signal a very big trend change in the trend. Of course, the trend has been bullish. We get a strong break below. If we get a daily candle that both opens and closes below the 21-day EMA, I think that's going to be a huge sign that we're coming down much lower, possibly down here to the 50-day moving average. Possibly testing 4,800 at least, if not lower down here to the 200-day moving average. With I think that's a very real possibility here once Bitcoin does top out, if it hasn't topped out already. But right now, guys, we are seeing some signs of strength. We're above the 8-day EMA as well. We just tested the 8-day EMA, had a very the bulls were able to defend it rather strongly. We're sitting between the 8-day EMA and the top of our Bollinger Bands here, guys. Again, I'm seeing, even though we're having a little bit of a correction right now, I'm seeing some signs of strength. I'm seeing right here, if we kind of just pull in here, guys, we can see that the bulls, every time the bears have attempted to drive price down, the bulls have been able to push it back up the last 3 days in a row fairly strongly. So yeah, I'm seeing some strength in the market here. Whether or not that's going to continue, guys, is again, I think it suggests with shorts being stacked, I think it suggests a break up, liquidate those shorts positions somewhere around 6,000 to 6,200, and then a stronger 25, 30 plus break correction back to the downside, guys. But as long as our 200-day moving average does hold here, guys, or really as long as this area down here between 4,000 and 4,120 holds, that in my opinion, that's kind of the last stand for the bulls. That's where I would expect the bulls to fight the hardest. That's really the bulls' last stand. If that does hold, guys, then we can count this all as a nice bullish trend to the upside, possibly starting that bull trend that everyone's hoping for, and that would confirm the bottom being in. I think the bottom is in. Doesn't mean we can't come back down and test the bottom. I think testing it is unlikely, but overall, I would say the bottom is in, guys. I think that very likely we're going to hold 4,000 is going to hold. But that being said, you want to make sure you're prepared, and you want to make sure you have a plan for it not breaking, for it not holding, guys. So remember, the good traders are going to plan for all scenarios. They're going to know what they're going to do regardless of what price does, and they're going to act on a plan. They're going to act on logic. They're not going to act on emotion. They're not going to act on FOMO or FUD. Zooming in here to the 4-hour, guys, we can see, and again, this is looking more for looking at or talking to more of you scalp traders here. We can see that price did break above, of course, our resistance here at 5,600, guys. 5,600 was acting as resistance back here, broke above it, and now what was resistance did start acting as support, and is still acting as support. Had a strong bounce off it right here, or again, I use that term strong relatively, had a bounce it off here, guys. So as of right now, yeah, this area is acting as support, guys. That is a bullish sign. We are still trading above this prior order structure right back here, which is significant in my opinion, guys. Remember, this was the bull's last stand from the $6,000 breakdown. It came down, was acting as support. What was support started acting as resistance. The minute it acted as resistance, that was it, and we broke back down to that 2150, creating new lows for 2018. That is now acting as support again. So again, what was resistance over here now finally is acting as support. If that can hold, now again, we aren't we're only on day 3 here, guys, but if that can hold, if we get the weekly candle closing above 5,600, guys, that's going to be an extremely bullish sign in my opinion, and a sign of good things to come. But that's a big if. That's a big if, and we'll have to wait and see how it plays out, guys. It's only Monday, so we got a lot left in the week. Referring back to my resistance at 5,800, guys, where we are currently finding resistance now, we're kind of stuck between what is now a very new support at 5,600 and, of course, resistance at 5,800. We're kind of sandwiched between that zone. And a break above, a decisive break above 58, a decisive break below 56, I think would be a very good sign of things to come here in the future. But another reason that we're seeing this strong resistance at 5,800, not only what was resistance at 5,800 for basically, since November of 2017 all throughout 2018. So what was resistance is acting as support. But besides that, even if that was not the case, guys, if I draw for my swing high here before our major breakdown, we go down to our swing low here, what do we see? Well, a couple things. We can see that, of course, our 618 fib, or really our golden pocket between the 618 and the 65 fib level, guys, that was a major resistance to get through, guys. Obviously, we bounced right below it, basically trading right within that golden pocket for literally 5 weeks straight, and then we had a decisive break above. That's the kind of move you. Sorry about that, guys. That's the kind of move you want to see price breaking major resistance with this bullish engulfing candle here on the weekly. So we broke above that fib level between the 618 and the 65, that golden pocket. That does signal oftentimes for algos. Remember, you're trading against algos, guys. That sets a bullish signal to algos to where if you're below the 618 fib, they're usually looking for a bounce off the 618 and picking targets down here. Once you break above that 618 decisively, now we haven't had a weekly candle open and close above the 618. So, decisive is a relative term. I'm not going to say we've broken it decisively quite yet, at least not on the weekly, and the weekly is oftentimes the chart that a lot of algos are going to use. Again, different algos do different things, but just looking at this overall, if I had to just eyeball it and say what are they doing here, guys, yeah, we had a decisive break above that. If we have a weekly candle close up above here again, I think there's a good chance that algos are going to start picking targets up here. So again, we'll just have to wait and see how it plays out. But my point in pointing this all out, guys, kind of went off on a rabbit trail there. Sorry about that. My point in bringing this up is the next fib level between, you've got your 618 there, and then the next fib level is what? Your 786. And of course, we're bouncing perfectly right off that next fib level of 786. So we're seeing a lot of order structure in the market, guys, which again is a bullish sign. Now that we've got more volume coming in, we're seeing a lot more structure. Again, that's a bullish sign overall. And I think so. If we had a rejection right here, guys, at this 58 and we had a larger breakdown, that would make sense in all kinds of ways. Not only do we have resistance from prior support acting as resistance, but we also have a major fib level acting as resistance. So we have a lot of confluence with areas of resistance, guys, which should be areas of resistance and now are confirmed areas of resistance. So a break above this, guys, would be a very significant thing. A decisive break above 5,800 would be extremely significant in my opinion. That being said, probability-wise, again, even if we have a wick above there, that's not a decisive break. A wick is not a decisive break. So if we wick above here again, I'm expecting a stronger rejection in that larger breakdown, and we certainly could do that to try to liquidate short positions. But until we get that decisive break, guys, I'm still looking for a decisive breakdown to a minimum of $5,000. But more likely, I think we're going to be coming down here between at least 4,500. But I think we're going to come down to up to and including 4,000 to 4120. Why do I say that? Because if I pull fib in the other direction, guys, and if I use this as, let's just assume that this is our swing high, we can see that that 618 fib and that golden pocket between the 618 fib and the 65 fib level coincides almost perfectly with our prior area of resistance right there between 4,000 and 4120. So a correction down to that zone, guys, would be very logical in my opinion, as well as a strong bounce off that area. So if we do get down there, guys, that's where I'm going to be definitely buying Bitcoin between 4,000 and 4120 without question. And even if we do go lower than that, I think there's the chances of getting a strong bounce off that zone, as I said in my last update, are very, very, very high. All right, guys, I've ran this long enough, guys. I'm going to start boring people, so I'm going to go ahead and wrap things there. If you have any comments, questions, suggestions, please let me know in the comment section below. As always, would appreciate an upvote if you have enjoyed this content. Till next time, guys, please trade safe. Take care of yourselves. This is Working, signing out.